Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 3rd of July. It's a bit of a short and quiet week at the end with the 4th of July holiday. Happy 4th of July everybody. While price remains above 1759.10, assume the upward trend remains intact. I also have a small channel on the daily Elliott Wave charts. While price remains within that channel, assume that price will continue higher. If price makes a new low below 1759.10 and or breaks below those channels on the Elliott Wave daily wave counts, then we may have seen a trend change. Elliott Wave analysis first, classic analysis last. This is the main Elliott Wave count because we should always assume that the trend remains the same until proven otherwise. So we should assume that this very obvious upward trend remains intact until we have proof that it's changed. The target is for primary C to reach equality in length with primary A at 1980. Within primary C, no second wave correction may move beyond a start below the invalidation point. This structure for supercycle B is seen as an incomplete double zigzag for this count. W is the first zigzag, X is a corrective structure in the opposite direction joining the two zigzags in the double, and Y an incomplete zigzag labelled A, B, C, subdividing 5, 3, 5. It fits quite nicely within this Elliott channel, which is drawn from the start of A to the end of B with a copy on A. Not perfectly adhered to at the moment, but if price breaks above and remains above, this trend line may then provide some support. Let's take a look now at the daily chart level where the low for primary B is this point down here. Now we're looking at the start of primary wave C, 1, 2, 3, 4 and a final fifth wave possibly underway. 1, 2, 3 may be incomplete, 4 may not move into wave 1 price territory, and then 5 should continue. This little channel is the channel I was talking about when we looked at the summary. Draw it from the start of intermediate 5 to sit across these lows. It also sits on this low. Push a parallel copy up to sit on this high, almost nearly touches this high. Price is remaining within this channel for the last several days. While price continues to remain within this channel, assume that the upward trend remains intact. If we see a breach of this channel, I define a breach by a full daily candlestick below and not touching this trend line. If that happens, consider the possibility that we may have had a trend change. At the hourly chart level, here's the end of minute 4 and the start of minute 5 with minuet 1 and 2, and now a third wave within the third wave should be beginning with subminuet 1 and 2 could be a double combination. A third wave at 3 degrees could be beginning early next week for this main wave count. The shorter term target is for -3 to reach 1.618, the length of -1. Although it could have been over at the last high, it does look like a 5-wave impulse at the daily chart level, and that's one reason why I've got that invalidation point for wave 4 on the daily chart for you. If -3 continues and minute 5 within it is extending, then it's incomplete. We may see this target reached, and then -4 may then begin. At the weekly chart level, this is an alternate idea which expects a trend change very, very soon at any moment, or probably at this week's high. It's a little bit difficult to see how it could continue higher now. We'll get to that at the daily chart level. The biggest structure for supercycle B is still seen as a double zigzag, W, X, Y, but within Y, A is still seen over here, B is seen as an incomplete expanded flat correction. So the first weekly chart sees B over here, and now we're looking at the possibility that B could be continuing further as an expanded flat. Here's a really good example of an expanded flat. It subdivides 3, 3, 5, and it's labelled A, B, C. Within an expanded flat, B moves beyond the start of A, and then C moves beyond the end of A. So here we have A, B, C. B has moved beyond the start of A, and now would be expecting for this idea for C to move beyond the end of A. Let's take a look at this at the daily chart level. Here's the end of primary A and the start of the expanded flat for primary B. A, B, C is subdividing 3, 3, 5. Intermediate B subdivides as a double zigzag. It can be any corrective structure as long as it retraces 90% the length of intermediate A for an expanded flat, and it does, and it's over that. Sorry, for a flat correction. For an expanded flat, it needs to retrace 1.05 or more the length of intermediate A. Intermediate B is a double zigzag, W, X, Y, and minor wave Y now could be incomplete, labelled A, B, C, and C a 5-wave impulse, 1, 2, 3, 4, 5. This wave count could have seen an end to upward movement this week at this week's high, but we need to see some downward movement before we can have any confidence in this idea. That's the biggest reason why it's labelled as an alternate. First of all, we'd need to see this best fit channel breached, and I'm drawing it in the same way on all daily charts. We need to see a full daily candlestick below and not touching the lower edge of this channel before we can have any confidence that this wave count could be correct. And then I'm giving you 2 price points, so depending upon your risk appetite, you may want to wait for one or either of these price points to be breached before you will have confidence in this wave count. If these price points are breached when we have confidence, then I will have confidence in this target for intermediate C to reach 1.618, the length of intermediate A, at 1408. Until this channel is breached and at least the first confidence point is passed, this will remain an alternate. We should always assume the trend remains the same until proven otherwise. The main wave count still expects an upward trend that gold's been in for many months now. At the hourly chart level, if we have a high here, we may have a first wave complete here, and a second wave may be continuing as a double combination. W is a flat correction, X a triangle, Y may be a little zigzag to take the correction deeper. This would be really normal for for a first second wave correction within a new trend for gold. The earliest second wave correction is typically extremely deep. Minute 2 may not move beyond the start of 1 above the short-term invalidation point. At the weekly chart level, this is a bullish wave count. It has the lowest probability because it has serious problems in terms of Elliott wave. The problems are in here, and I'm not going to go over that again. If for newer members, you might want to look at last week's video where I explain in some reasonable detail why the subdivisions in here favour either of those first 2 wave counts rather than this alternate bullish wave count. If gold is in a new bull market, we may have a first wave up here, a second wave correction over here, a third wave could be over here, a fourth wave could be unfolding as an expanded flat, A, B, C. 4 may not move into wave 1 price territory. Let's take a look at the daily chart where the high for cycle 3 is this point here. You'll notice that I've got the end of the impulse slightly differently for both of these wave counts. You can see it either way for bull or bear. I want to consider all possibilities, so I'm going to label them slightly differently. If the impulse was over here and the expanded flat begins here, A, B, C, B could be over. I'm labeling them this upward movement in exactly the same way for both my alternate bearish count and this bullish count, a double zigzag, W, X, Y, and Y could be complete, and it looks complete. A, B, C could be over. We could have seen a trend change on Wednesday this week. Once we have some downward movement below the channel, then I'd start to calculate targets for primary C. I'm not prepared to do that while price remains within the channel. And it is, of course, still possible that intermediate wave Y could continue higher. That's why I'm not giving you an upper invalidation point. This final fifth wave most certainly could extend higher. At the hourly chart level, again, we're seeing a possible trend change here. If that's the case, a first wave, a second wave correction may be incomplete as a double combination, W, X, Y. When it's done, a third wave down should be underway and should break through the lower edge of the best fit channel. At the weekly chart level this week, a very weak weekly candlestick with weak volume and on-balance volume at resistance doesn't look particularly bullish. Price has closed above resistance, but once we get to the daily chart, we'll see that it hasn't actually affected a proper upward breakout. I don't have confidence in it. ADX is flat. The previous extreme upward trend may have ended. ATR is declining as price is moving sideways and now higher. ATR is still declining. There is weakness in that upward movement. There is triple bearish divergence at the weekly chart level between price and RSI. There is weakness in this upward movement. This market is at a very high risk of a big trend change and a possible multi-week pullback, if not a full trend change. And MACD is bullish. At the daily chart level, I've had to move resistance up slightly. We did get a close above previous resistance, but it was on a day that didn't really have that much support from volume, and the very next day price closed back within that prior consolidation zone. So that possible upward breakout was false, and we moved the upper edge of resistance for this consolidation zone up slightly. It was just an overshoot of that previous area of resistance. For the very short term, Thursday sees a long lower wick. There's no candlestick for Friday from stock charts because it's New York session only data, cash data, and New York was closed on Friday. On balance volume is at resistance. RSI at the daily chart level also shows this long bearish divergence. This market is at risk of a reasonable pullback. ADX is below 15, no clear trend, that's normal while price is consolidating. While price is consolidating, it's downward days which have strongest volume. This suggests a downward breakout may possibly be more likely than upward. That trick doesn't always work, but it works a little bit more often than it fails. It's just one little piece of information to weigh up with everything else. ATR declining, that's really normal when price is consolidating. Stochastics overbought, so with a consolidation, we would reasonably expect this upward swing to end and now a downward swing to begin if the consolidation is going to continue. And we haven't had a proper upward breakout this week. And MACD bullish. That's all from me this week with your gold analysis. I hope that all of our members are having a fabulous 4th of July holiday, and please stay safe and stay healthy, everybody.